Good afternoon for everyone in South Africa, and good day for everyone else wherever you are watching this from around the world. Um, I don't know, I say this on every event. I've been really looking forward to this one, but particularly looking forward to this one. It's in my home industry of banking, where I come from, with the group CEO of one of the banks that's impressed me most over the last 10, 20 years, not just in South Africa, not even just in Africa, but across the whole of the globe. We are very, very lucky to have Graham Lee joining us. Graham, welcome.
Thank you very much, Colin. I'm very lucky to be here.
Now, some quick sort of housekeeping and a little bit of an introduction to what we're looking to go through. Firstly, if you've not joined the calls before, they're obviously live. If you haven't worked that out, please ask your questions, share your comments. I don't promise we'll get to every single one, but we'll certainly try and cover the best ones. It is meant to be interactive. Otherwise, I just get carried away and I just ask my own questions. That might not be so much of interest for you guys. In terms of the themes that we want to cover, you might have seen it on the pre-mailers, but there's a lot to try to crack into this hour. I really want to understand why Capitec has been so successful. When I sent out the first set of mailers, I think I put them down as having 24 million customers. I've been corrected numerous times by their marketing team. It's 26, and I'm sure by the end of this call it will be 26 and a half or 27. They seem to be growing at a rapid click there, and there's a reason for that. I want to dig into that reason. And more importantly, I want to try to learn from it in terms of what the leadership style is, how people, what principles, what decision making is in place. And perhaps the biggest question for me is how they're going to sustain that. They're now a teenager, maybe a young adult. They're 25 years old. In corporate terms, that's getting on a bit. We're seeing companies die deaths quite quickly nowadays. 25 years is getting on. How are they going to maintain that young set of ideas where they can take risk and try new things, particularly in an industry like banking where there's so much regulation and bureaucracy that slows people down. And finally, just before I do get started with my first question, thank you very much to AWS and Silicon Overdrive. These events are only possible because of their support. We're not doing sales. We're not really putting these calls on for the benefit of the guests. It's informational. We're hoping you learn from it. But I do have to say thanks to the sponsors. And if you are interested in AWS or cloud in general, I really recommend Silicon Overdrive to get in contact with, and I'll happily set that up for you. So with that, Graham, let's start with the first question. Why are 26 million people using Capitec?
Colin, 25 years ago, a small group of people decided that they thought banking could be quite different. In actual fact, they knew banking could be quite different. So they walked around the streets pretty much everywhere in South Africa and looked at what was excluding people from banking. And what they saw, that people were being excluded, even though there was a lot of banks. South Africa's actually always had a very strong banking industry and very sophisticated financial system. So there were a lot of banks with a lot of different accounts and product offerings, but people still being excluded because it was very complicated and unaffordable. And some of that unaffordability came with the terms and conditions, the asterisks, which meant that most fees were hidden from you and you got hit from them when you least expected them. It wasn't accessible to somebody who was working on a mine in both space and time, or someone who's working on a farm. And people were treated quite poorly when they came into banks. And so Capitec was founded on these principles, which were the antithesis of those four things. That we should make it simple for everybody, simple and easy to understand, intuitive, in fact. Make it accessible to everybody, open longer hours, be in more places, be more available through every channel that client is, whether it is in a branch or an app. And of course, to be affordable. And for that to happen, you need to design an entire organization for affordability, and then to provide everybody with the right kind of service, every single person. So everybody gets the same color card. Everybody gets the same respect when they walk into our branches or phone a call center, regardless of who you are. And that quality, that personal service that you get should make you feel as if it is a privilege for Capitec to serve you rather than the other way around. Those four principles are why the 25 million, almost 26 million people bank with us, and it's what we focus on every single day, in ensuring that we make every new thing stand up to those principles, every decision we make stand up to those principles.
When did those principles or those values get developed? Because I should have said on the intro, I mean, you've been with Capitec for what, 23 years now, which I guess makes you one of the very first employees. You've been there for the long ride. It started off as a micro lender. When did you start, if you can recollect it, it's such a long time ago, that formation into a bank and the banking license and come up with those principles, or were they baked in right from day one?
Sure, I think they were baked in right from day one. So, Michiel and Rian and Andre Duplessis and Harry and a few more, I think they had it in their minds right from the beginning. For me, as a reasonably early employee, there were many people before me actually, but as a reasonably early employee, I got it as Capitec was becoming a bank. The transition from microlender, but I think it was very much in the founder's mindset from the beginning.
Okay. So you're sitting here, we fast forward, I mean, 26 million customers. I mean, if I've got these correct, you've always got to be a little bit careful. My assistants have been running around providing so much data about Capitec, and of course, my assistants are no more people. It's Claude and ChatGPT and Kimi and 1,001 other AI agents that have been doing the due diligence. But if they've got it right, ROE 31%, headline earnings up 23%, from zero to hero in such a short period of time. Having some principles is great. It gets you in terms of the direction, but you've obviously taken decisions which have manifested in something your customers want. From their perspective, what is it that they like about Capitec, do you believe?
So if you take that, what the feedback we get, it really does fall under the banners of those principles. Clients like us because it's easy to understand. When you come into one of our branches, not only is the product design such that it's accessible for everyone to understand, but even the way we display it. So a way that it reflects, for example, is side-by-side consulting in our branches. When you sit down, you're sitting side by side with one of our service consultants. You see exactly the same screen as them. You can see what's going on in the way that we design those screens, whether it's that screen or the self-service terminals. They are designed in such a way that to be intuitive to the client as well as something that's just usable for the employee. And we then take some of those themes and design principles through to our app so that Capitec is recognizable. So the simplicity of the app is reflected in the simplicity of the SST, is reflected in the simplicity of the front-end system. So in everything we do, and I think customers respect the fact that we're consistent with that simplicity fundamental the whole way through. They like it. We are affordable. We don't seek to be the cheapest. We seek to provide the greatest value at the price point. And we make sure that our clients don't just experience that in the fees as we print them out on brochures. We try to make sure that they experience that in the fees and rates that they experience every single month, and they are not hit by unexpected and hidden fees and terms and conditions, which so many banks around the world have in place. So it really is just following through with those, Colin. I appreciate that. I appreciate it might sound like the corporate speak that we focus on those principles, but it is incredibly important to what we do, that we design every single product and client experience and UX to fit in with those.
It's interesting. Simple, affordable, accessible. Let's take accessible is this one of the reasons why you're one of the only banks that seems to be doubling down on branches? I mean, it's a wee back in time now, but I remember, 10 years ago, picking up on the fact that you'd actually put two branches effectively next to each other, different sides of the street in downtown Joburg. And I thought, why on earth would you do that? Everyone else is closing branches and you've got two within walking distance. This looks like poor decision making and bad management.
So there's probably worse examples than that. There are several shopping malls, for example, Gateway, where we've got two branches in the same mall. Many examples like that in actual fact.
Why would you do that?
Accessibility means being where our clients are and meeting their demand. So we basically follow the data. We follow the footfall of our clients, where they're interacting, and we make sure that we are where they are. And our clients are still, many of them anyway, if you think about the 26 million clients, and our vision is to serve 95% of South Africa, that means serving everybody. And within that group of everybody, there are many clients who are still in cash, for example. And so we'll continue to serve them cash. There are many clients who are in a remote area who choose not or do not feel fully comfortable yet with digital. And so we'll serve them face to face. And genuinely believe that serving humans with humans is a competitive advantage. I think every single good thing that we do using both digital channels and new tool sets to serve clients and so forth, they only work well in a world in which you're empowering humans to serve other humans better. Clients, of course, can self-serve them, can serve themselves in many scenarios, and we design for that in our simplicity and accessibility. But when it comes to a difficult thing, and banking is full of difficult things, taking the right decision with respect to credit, as we move beyond banking to things like insurance, understanding what to do properly with respect to insurance, it is hard for many people to understand that without any help whatsoever. And those human beings need other human beings to help them with it. I genuinely think it's a competitive advantage. We have those two branches on opposite sides of the street in Joburg because our clients needed it, and we could see that in the figures, see that in the numbers. Same with Gateway Mall, and same everywhere else that we put our branches. And yes, we are going to have more branches at the end of this year than we do now.
How do you get the feedback? You mentioned data, and you've got a very strong data background, I think, credit and technology, and we'll chat about that later, about how you've transitioned from being in the numbers to now leading, what is it, 17,000 people, and I see that as a transformation in terms of, well, going from reading numbers to go and telling incredible stories to go and motivate people is a very different skill set. Perhaps we'll get to that later. But you've had to make really interesting decisions for your customers. I mean, you could be charging them a lot more cost. You could be charging them huge amounts, in terms of credit. And yet you're not doing that. How do you keep that decision making honest in terms of this, the values that you're set there, particularly, it's going to be affordable. So many of the other banks, I mean, I won't name who, I've just done a transfer. We're meant to have cheap banking now because of, what's happening with PayInc and the SARB. I've just done a 3,000 Rand transfer. It's charged me 50 Rand. It's absolutely ridiculous. But they can price that because I'm captive. It's really difficult to break away from them as my primary banker. And it's in, I guess in colloquial terms, they're screwing me. But you're not doing that. How do you hold back with your board and your, executive? It was so easy to increase margin.
Before I answer your question, one of the advertising campaigns, the whole marketing philosophy that we had at Capitec for quite a long time, my favorite actually so far in all the years, was the Ask Why campaigns. Ask yourself why. And I think you should really ask yourself, Colin, are you really locked in? And ask yourself why you're still banking there. Anyway, I'll answer your question now. So following through on that fundamental principle, it meant a couple of things. It meant that we needed to design our entire organization to be affordable. That means our systems, our processes, our people, how we lay ourselves out, but also the culture of it. So we make sure we keep our own costs low. Everything we do, we make sure we're doing as cost effectively as possible. Again, I don't think the best way is the cheapest way. And so cheapest is not what we're trying to do even internally with respect to managing our expenses. What we are looking for, though, is the greatest level of cost effectiveness for our clients. Then our philosophy is one of long term. So if you are only chasing profits this year, then yes, you're right. Then you would keep the prices higher or raise them even some more. But that's not sustainable. Our business is one of scale, which means large numbers of clients, in which because of those large number of clients, we create economies of scale. In order to be able to accomplish that, you need to think about a world in which you will have scale. Design for that and price for that so that you get there. If you start off pricing too high with an expectation that as the economies come in, then you can reduce prices, you're already on a back foot. So it's always been intentional. We have a long-term view, and that long-term view is that when we serve our clients well, when we give them good quality products, and when we charge them appropriately, they will stay with us for a long time. And in the long term, if we treat our clients well, our clients will treat our shareholders well.
How do you do that with a long-term view? Because this comes to the heart of you're a maturing organization. If I'm sitting in any other organizations, there's no such thing as a long-term view. For most of them, they don't even have a medium-term view. Their shareholders are asking for dividends on an annual basis. They're complaining when their stock price hasn't kept up with the rest of the market, the CEOs are rotating every 2 or 3 years, and they basically end up creating an environment which is all about the short term. And the incentives for the CEOs are all about the short term. So what do? They cut costs and they try to go and jack up margin. They look for cheap corners because they're not there in the long term. How do you go and keep that philosophy in your organization, particularly because you're the fourth CEO? You seem to have kept it up until, yourself. Now you're a year in. How are you going to keep that through for your predecessors as well, or successors?
I think staying true to our values. So one of the really important aspects of working at Capitec is we do very much focus on getting the job done and realize that getting the job done is working together. So how that translates, both that and the long term, is in terms of the entire company, we don't have different bonus pools, profit pools. We don't have different incentive structures for entirely different parts of the business. We have one bottom line, we share one bottom line. Everybody is focused on the entire company bottom line. And all executives, the significant proportion of their earnings actually come in the form of long-term incentives, and those are genuinely long-term, and they are in the mechanism of at-the-money options. So if the share price doesn't grow from here long-term, not by tomorrow, but in the long term, over 4, 5, and 6 years, then an at-the-money option means that there will be zero reward if you do not grow it. So you constantly, as a senior executive, forced to think of two things. Number one, the whole company, not just the little bit that I'm running, because we share the bottom line, and there are no silos. We're very deliberate in that. And then number two, our incentives are aligned to that long term, and it's growth in the long term.
Well, I've got a question. Sorry, go and carry on.
Yeah. So then, I was going to go down a slightly different track in answering your question as well. One of the key elements that I realized a few years ago is that thinking and acting and planning and even doing today is not enough. So all of us who want to be successful need to be able to think and strategize, but also plan and act in at least 4 different timeframes. And that's being very simplistic because, of course, those timeframes are a continuum. But you need to be able to think and act for everything you need to do for the business such as you have it today. Because if you lose sight of what you're already good at, you'll lose it. So you have to protect and grow what you already have. And that means you need a full set of strategies, plans, and implementation actions for protecting and growing what you have today. But you also can't forget about the future. And the future is also not just one time frame. So you're also accelerating the businesses that should be bringing you the significant increases in your income and revenue in 1 to 3 years' time. And acting today so that that happens. And incubating, starting up, but actually incubating things you've already started a couple of years ago so that you're acting today to be creating business value in 3 to 7 years time frame. And you already start putting in place the key pieces, the strategies, the high-level plans, the capacity, actually hiring the people for those businesses which will yield growth in 10 years' time. All of those require not just strategy today, but action today. And so balancing that becomes very, very important as you grow in an organization.
All right, we've got questions from Craig and Glenn. I'll get to them, but I want to slot them in the sections that we've got laid out. I just want to continue this train of thought. Let's go off script a bit. Not that we had the biggest script, but essentially, I want to know how you take decisions. Let's give a bit of a case around that. I come to you. I'm a junior staff member. I've come up with this idea. Let's go and create a new scheme for lending money to the taxi industry. Here's how we're going to do it. You're faced with decisions like this every single day. I've got a new idea about what we should be doing for our credit modeling. I've got a new idea about how we can go and buy these 4 businesses, and it could be amazing. I want to do a partnership, with a crypto firm. You just must be inundated, with questions coming for you, looking for you to go and take some sort of decision on the back of it. How do you manage your day so that you actually get home to see your family and do whatever you like doing outside of work?
It is definitely something which I need to get even better at. And if I look at what I've done less well in the last year, that's probably one of them. So, first of all, there's a very simple and simplistic recognition that the only word that gives you focus and priority is the word no. So saying yes to more things is more likely to be distracting. And so you're much more deliberate about making sure that you say no to all of the things which don't meet your model, and that you're very clear about that. And you do so in such a way that it doesn't just not take up your time, but hopefully it doesn't allow anybody else's to be taken up and distracted. Then we do have a framework. There's a couple of different lenses, obviously, that you put in it, and I won't go through it comprehensively now. But just as a taste of this, the first lens always is client. Is it clear why this is better for the client? Is it clear how we're going to create value for the client by doing this thing? The client is the most important lens we put over everything. We do put over those lens of the fundamentals. And what can we give this to the client in such a way, do it in such a way that it meets those fundamentals? Is this something that we're going to be proud of? And obviously then you go through the entire set of things which are the cultural anchors of your business, because that, I think, is the most important way to decide strategy, is that it's in line with the cultural anchors of your business.
Let's talk about culture then. As you've sort of brought it up, how do you get this culture? So one of the things I'd expect that's important for an organization that's young and innovative is that you give a lot of autonomy to your staff. Autonomy is a really difficult word in a banking infrastructure, a regulated environment, because typically what happens is you end up by setting up death by committee, death by hierarchy. And you end up in a situation where the largest population of people in your organization are actually in control functions, whose job, which they've been pre-trained for many, many years, is to say no. How do you keep that culture of willingness to experiment, ability to make mistakes and be honest and share those mistakes with your colleagues, and that's not a career limiting move, so that you can continue, I guess, being at the forefront of development and not become staid and taken out by the next mini Capitec over the next 5 or 10 years?
So deliberately, and with, I suppose, some discomfort every single day. I think that losing a culture such as ours is the easiest thing to do. Keeping it is the hardest thing to do. And so the first thing is to recognize that it requires work daily. We haven't got it switched on and it'll always stay switched on. Rather, every single day we have to fight for it. And I think the best way of reinforcing a culture is through your decisions, and making sure that your decisions are always building on, reinforcing that culture and not breaking it. Then, I mean, you're absolutely right about we're doing things in an environment which is regulated. Now, I think regulation is not as bad as it might be held out to be, in the sense that I think regulation can be very productive, particularly over the course of years, and sustainability, provided you remember what the goals of those things are. So to your point on a committee, if the committee is the meeting and the attendance of that meeting on a specific day and the minutes from the last one and the pack, then you're missing the point. The point of that committee was that there's three of us. For example, one committee, myself, Grant, our CFO, and Ismail, our CRO. It's not us in the job titles, it's just us, the three of us. The committee is the three of us, not the meeting date or the minutes. And when you remember that, you realize the reason we want you three to get together to make the decision is so that you can properly sense check us. And that's the job that we do. That's the job that is to be done. So a decision can come to us quickly. The three of us can have a discussion quickly. We can have a properly formulated committee and have sense checked each other correctly, very, very quickly, provided we remember that the committee is the three of us and not the meeting structures. Does that make sense?
Yeah, it does make sense. Let's take it up a level though. One of the policies that a lot of organizations say, and they say it because they don't do it, is they have no jerk policies. So they sit there and they say, to be a fantastic environment, we want more ergo. We don't want ego floating around. We don't want people trying to go and do land grabs. We want people that work collectively on behalf of the client. It sounds amazing. It should be easy. It's not. Most organizations end up with hierarchy and people doing land grabs. One way to do it is to obviously employ well. Google have gone through stages where they've employed no one. If they couldn't find the right person, they'd prefer to give up revenue and be slow to market rather than employing the wrong types of people. The other thing, which is even harder, is if you do have the wrong types of people, do you get rid of them? So I guess, both questions: how are you treating employment, and what do you do when you end up with the bad apples?
So again, just remember this is a hard fight that needs to be fought every single day. But you do it through your people mechanisms. You make sure you're very, very deliberate in who you hire, and that you're hiring them both for those full resonance with the values that you have, but you're also very explicit up front about what's good as an employee at Capitec because of those values, what's hard at Capitec because of those values, so that they, with open eyes, still want to join the organization. But you very much assess them for it. When you set goals, when you performance appraise, when you promote and reward people, and every single one of those things, you rate the values and doing things the right way, even more importantly than simply the outcomes. And you make sure that that's built into the mechanisms of your people management, but also how you prioritize in your organization. What are the important items on your dashboard? If every single day we were looking at our share price or what our bottom line was, then ultimately that would break the culture. But they're not. Those aren't our metrics of success. We do look much more on the lag measures of client satisfaction, but even more importantly, that the input measures to that. For example, we've combined a full set of measures of client experience and stability and protection against crime and fraud into something which we've loosely called product health. But product health as a mechanism within Capitec prioritizes the client and the client experience through everything which can protect them, help obviously protect them from crime, everything that can make their experience significantly worse. For example, downtime, making sure that those are incredibly highly prioritized, but then all other aspects of their experience, including how it feeds through into call centers and social media, etc. And that is our collective highest priority at Capitec. So I don't think there's one single thing that you do. You have to do 1,000 things embedded into the mechanisms of every part of your company.
Yeah, a sort of yes or no question then, just to clarify something for me. Have you had to exit people who have not had the right?
Very much so, yes.
Okay, some questions
Very
from
important
the.
part of your human management process, actually.
That's good to know. People talk about it, but sometimes they don't execute. So we've got a couple of similar themes coming through on the Q&A now. Sophie kicks off. Banks often focus on this external strategy, growth, market position, and competitive advantage. Jade's talking about the evolving the competitive landscape. Sort of bringing those together. The first question is: do you actually look at your competitors? I remember Amazon are famous, for example, in interviews to say that they don't really care about their competitors at all. They are so focused on their customers, they think it's a waste of time considering what, I don't know, Microsoft or others are doing. They want to get out there and just focus on being with their customers, interviewing their customers, watching customer data to go make the most customer-centric type of experiences. That might be a bit extreme for most companies, but how do you try to balance understanding what your competitors and what's happening in the market versus what your current and future customers might want?
Sure. So firstly, I think a balance is to try and be balanced in it. I really like Amazon's approach, but I don't think that's exactly what we need to do. I think it would be quite arrogant and complacent to not pay any attention to our competitors at all. We have many competitors, some big banks, some small, some old, some new, some obviously as we extend beyond banking who aren't banks at all. And a lot of them are doing really clever things. So to ignore them completely would be quite foolish. So, but on the other hand, the balance is what you don't want to do is get distracted by all the noise. And you certainly don't want to be chasing somebody else all the time. And it's quite hard sometimes, particularly as there are more and more and more potential new banks. It seems like every sort of single retailer is planning to open a bank, probably mom and pop stores too in the future.
Well, we've got Pep and
And
Shoprite and Revolut have just entered the
Indeed.
market. I mean, it's a very competitive space.
And so it is quite noisy. And so the real question is, how do you sort the signal from the noise? And the way I think that one should do it, the way that we do it, is the lens of client. So to balance the Amazon approach and pay attention to your competitors is use the lens of client and ask yourself always, what are they doing that's better for the client than us? Because we should learn from that. If we see them coming into the market, how will they serve the client better than us? We should learn from that. Do we think they've got plans for doing things differently in 5 years' time that will serve the clients of the future well? Do we think that'll be better than us? We should learn from that. In what way are those competitors really doing well for the client, creating client value? And we should definitely take lessons. So I think there's that balance. It's still client focused. It's still client obsessed. But it's not just looking internally at how we serve the client. It's also seeing what's being done well elsewhere.
When you do look at the current work and over the next couple of years, and I know you don't like announcing things until it's ready to be announced, but how do you see the Capitec model evolving to not only just continue improving the service to your customers, but obviously to be more competitive against some of the guys that are coming in? So Pepkor, for example, has a branch network effectively because it's got its store footprint that's coming through. Revolut comes in and offers a subscription model where you get lots of paid benefits by just being a Revolut, participant. Capitec is still squarely sitting there with the branch network, simple, affordable, accessible, personalized sort of experiences. But how are you going to change that model, do you think, over the next, or how are you going to be forced to change the model potentially because of technology and changes as well as these competitive threats? I know it's kind of difficult to answer that in a full day session, but let's see how you get on in a minute or two.
Yeah, what the 1 minute version is. Okay, so
Yeah,
I mean, clearly what you do has to evolve. It continuously has to evolve. But you don't have to move away from your principles. You can just work out how to deliver them better. So I see us becoming much more effective in delivering each one of those over the course, not just of years, but even the next couple of days, months ahead, because of the appropriate use of technology. So there are ways in which we will be able to bring down costs further to ourselves, and we'll pass that on to the client. So we're going to become more affordable. The balance of bringing more and more services to the client, or at least the risk of bringing more and more services to the client, is that it breaks simplicity. And our ability to use some of the latest technologies to be able to present just for you the things appropriate to you means that we can provide more and more services, but still do so simply, because every one of the 26 million is not seeing exactly the same thing, which has only is becoming more and more accomplishable, more effective with the use of that technology. We will continue to serve our clients where they need us, and for the meantime, that means branches. But we are a complete digital bank, and we'll become more and more complete digital bank. There are additional products and ways of serving the clients, which we do have not just in planning, but in the delivery pipeline quite far along, which I will not share with you, but are coming soon, because we have to continue to evolve what we give to our clients. And that's in the protect and grow space. Then sort of looking slightly further out, there's business banking to disrupt. There's insurance work to be done. We have a tiny piece of the insurance market, and that's just life. There are other forms of insurance as well. There is the MVNO, which I see sort of taking us sort of quite significantly forward. There are some enterprise businesses in the form of enterprise payments businesses, enterprise data and insights businesses that take us more beyond banking as well. And in the longer time frame, we'll move beyond South Africa's borders as well.
Yeah, I'd love to go and get into each of those in MVNO and insurance and business banking and payments. Maybe we touch on a few of them. When you say there's opportunities, is that because you believe that the current incumbents are doing a pretty bad job, in all honesty, at actually offering valuable services because of, I don't know, legacy debt, friction, laziness because it's not competitiveness? I mean, it sounds like you're very hopeful that there's masses of opportunities out there.
I prefer to think of it in the sense that Capitec has some strengths, and I think if we put those strengths into these new opportunities, then yes, we will be able to not just win market share, but even grow markets that don't really exist yet. So, for example, there's significant portions of South Africa where ordinary South Africans life insurance is not really a product that they use yet at all. So that's almost a blue ocean type market. It's designing the right kind of life insurance for that market that's never used it before. There are fantastic business banks doing fantastic business banking, but it's not necessarily available to every small business in the country. And so, putting Capitec strengths on those business problems, I do think there's significant opportunity.
Well, let's touch on that. And it was one of the questions that was before, and let's talk about credit. I happen to think credit's incredibly important. It's kind of an obvious thing to say, but people don't often realize that without banks, without credit, there wouldn't be an economy. I mean, if we were to turn off credit, this would be pretty much the end of everything. And that money supply that we like spending on a day-to-day basis is fundamentally driven by the amount that banks are willing to go and actually lend, and they're allowed to lend by their regulators. So to say a world without credit is good is I think just one of the daftest things you can possibly say. So giving credit to people who don't have a file, who don't have, salary from a nice employer, who are perhaps getting cash in hand from here to here, who don't necessarily want to be picked up or even think about the tax authorities because the numbers are so small. Have you got thoughts about how you're going to go and try and get into that space to offer the opportunity of credit and lending for people who are in that thin file, using new models, new approaches, to try to go and support these guys? It must be a factor for a lot of your community.
Yeah, very much so. So first of all, I also am a great proponent of credit. So, I think that when people worry about the negative aspects of credit, and they are right to do so, it's always in the context of something that was given inappropriately to the wrong person and the wrong amount, and they couldn't afford it. Basically, everything wrong with that. Credit done well is not money, it's time and opportunity. It's a small business being able to bring in whatever capital to buy the means of production to be able to start or to bring forward their ability to produce so they can sell more. For a young person, it brings forward in time their ability to get that house. For the people selling it, it's brought forward in the time their ability to get the money out of that house they've spent the last 20 years and then enabled them to retire. It creates opportunities for the bill and, as you say, the entire economy. But it really is time that you're giving to someone when you give them credit. You're giving them the opportunity years ahead of when they otherwise would have been able to afford it. That's what happens when it's done well. Anyway, but to your point, there are many people excluded. Now, I think it's very important not to mix the input with the output. Credit scoring, credit bureaus, etc. That's an input. Having a good credit record is an input. So what we want to do is be able to see clearly each individual, what their likely future behaviors are going to be, including the propensity to repay you, their ability to be able to do so. And none of those things are as a point of time today. All of those are forecast views of the future. And so you use whatever information is available to you, whatever data is available to you, and more data is becoming available. So our approach is simply to be responsible, but to do so focusing on being able to forecast that future well and taking into account any possible data sets that we have. And that includes the credit bureau. But it does also include every single other type of data that's available to us that has strength in predicting that future. Transaction information is one of them. Contact information, and let's call it information coming from the cell phone networks, is another. There are many other examples of very useful data that help you predict not just who's going to be good from a credit perspective, in the form or case of they will still be able to repay you in the future and they have a propensity, they are the kind of person who will do so, but also helps prevent fraud, helps predict other negative things that you can then put plans to mitigate, which then enables you to have a more effective and efficient company, which then allows you to be less expensive again than your competitors. So it's really looking for that data everywhere, and making sure that you store it properly, you store it permanently, you do it in such a way that it's well governed and properly understood with the right metadata. When you build up features, those features are published in such a way that everybody else in the company is working can also access those features, because something that's predictive for mortality might also be predictive of credit risk, for example. and to do all of those things with, again, with rigor and discipline.
To do this at scale, obviously technology is key. Many people that follow Capitec will obviously know that you're AWS users. A lot of people that follow you on social media will have probably come across Andy Baker if they don't know him, directly. It's very clear that you're doing some very innovative pieces. I want to start though on the AI side of things. Looking more into the future. I think in the accounts or on public record, you've highlighted that you've got about 5,000 staff who've got AI access in one way or another. I kind of look at this as a tiering. There's giving people access to, I don't know, Copilot or Claude, which is kind of nice, but it's difficult to see the impact. There's like the second tier where you get your developers using these platforms to go and assist on their coding and product release. And then you've got tier three when you're bringing it out to customers, real value, agentic agents, comms channels which are fully automated and actually taking people out of the loop, initially internally, I guess, and then over time, even externally as agents go and face off against agents. Can you tell me where you kind of, you see yourselves in your AI develop at the moment on those tiers, and what's exciting you most about this technology? Or actually, what's exciting you and what actually scares the bejesus out of you?
Sure. So, I mean, if answering it in the form of your tiers, we are operating and actually delivering real value across all three of those tiers. So in the tier one, actually far more of our people now have direct access to those AI tools themselves and the outputs, sort of agents working alongside them for others. In terms of tier two, we have generative AI live inside our compliance operations, our anti-fraud operations. We've embedded an AI agent into our business bank credit processing, which makes the turnaround time on a credit decision, I think, pretty close to 95% faster. And then tier three is even more interesting and more exciting. So we have a couple of examples in which our frontline people have real-time contextualized insights into the client right in front of them as that client's right there. So it is effectively the client seeing it themselves at the same time because of our side-by-side model. And clients have shared remarkable stories about how well we're able to serve them, how quickly we're able to serve them, because when they phone into the call center, for example, we know exactly what they're going to speak to us about. And of course, many more stories as well about alerts stopping crime in its tracks, which is also something that makes me very proud. Quick aside, we had a tech and data conference yesterday. So all of the people who have a touch point to tech and data were in a big conference, and Andy was there, let's call it the main host of the event. And we had these breakaway sessions. And I was actually astounded. I am so proud and excited to be associated with those really incredible people that we have working with us for our clients, because the number of new ideas and products and interventions that we've created really just in the last 6 months has dramatically changed how we pen test, our other approaches to protecting both ourselves and our clients from cybersecurity, how we market to our clients, how we serve our clients through all of our front ends, how we manage our payment systems. There pretty much isn't an area that we are not significantly better off than we were 6 months or a year ago, because we are equipped to use the latest tools in the best ways. But again, the best way means focusing on the outcome. So the goal is not embedding Gen AI. The goal is getting the level of customer service that you aspire to, and the tool that you use to get there is Gen AI.
Well, one of the coolest things I can think of that was very visible that you introduced was the callback feature. I was on my Capitec app just the other day, and I was chatting to my wife trying to make a transfer, and it wouldn't let me. It was very frustrating because it was telling me that this could be a Vishing, example. And obviously the technology to do that, where you're able to go and see that I've got a call that's incoming and I'm on the app at the same time, has really required you to go and have detailed, accurate, unhackable information being sent to you from the device to your servers so that you can automate some sort of response like that. The technology is fascinating. I don't think that's for this call. That experience for me personally was a little bit frustrating. I wanted to go and transfer the money. You've put it in though for the benefit of, 15, 60 million, 16 million app users. How do you get that balance right between there's a security friction that you've deliberately put in place, and a friction is the upside is less fraud. I think, you've had 600, 700 millions worth of fraud that's been prevented, and that the sort of customers that are sitting there just going, oh, that's slightly annoying now in terms of that's an extra step or thing I can't do which I wanted to do, I used to enjoy doing before. That must be a difficult discussion before you release these apps or these add-ons and features.
Yeah, of course. So the balance there is you want all good clients to have a close to frictionless experience, and you want all the bad guys to have 100% friction. And of course, getting the balance right. So again, it comes down to sort of being personalized, and we're constantly evolving that. So, exactly what experience you get in paying a new potential supplier to yourself and what I get will not be exactly the same. And we'll continue to evolve how we recognize your behavior on a phone call, and potentially give you a different experience to somebody who's going through that experience of making a payment on a call for the first time, for example.
One thing we haven't mentioned is trust. I just want to just dip into that one. JG Maxwell. Trust is fundamental for client loyalty. I think that's a really good example. I've left insurers because I lost trust. They didn't pay on relatively small claims and didn't trust them for the big ones, and so moved on. They didn't seem to care. How do you maintain trust with your customers? I guess this friction that you're giving for security is one issue, but there's must be many more things. Um, how do you, for example, deal with people who are over late on their payments? How do you keep that relationship or trust? How do you make sure that if they had a bad experience, you can, support them in some way or another? There must be a gazillion ways that you're doing, but what are the kind of key focal points that you have for that?
Sure. So, the three focal areas are stability. Nothing breaks trust like not being available when the client needs to be able to buy prepaid electricity at 3 o'clock in the morning. So stability and availability always. Obviously, security. They are our highest priorities. And then the client experience, and particularly in the context of that example you just gave, being able to deliver the messages, appropriately explaining why. So I think when people understand why there is that friction, or why there's been a no answer to the credit application, and when it's clear to them, they are much more accepting of it, and you can then deliver the message without breaking trust. And it's not an area that we've always got right, and I'm sure there's quite a few examples that we're still getting it wrong today, but we are actively trying to fix all of them, because we do
Mm.
rate those three things as our three highest priorities in the bank.
One way of building trust is doing things like this. You didn't have to be involved on this call. It's a request. You very kindly accepted it. I guess we're thinking a lot of the other organizations struggle, I think, to build trust because they wrap up their executive team in cotton wool. They don't share them out. You never get to see them. They sort of go in mysterious ways in their black Mercedes. What do you guys do at the executive level to stay in touch with your, millions of customers? And let's be honest, if you're a senior banker, you're doing all right. You're getting paid quite well. You're living a nice lifestyle, living in a nice place. Your customer base is sitting there in townships. How do you keep that, relationship between you, the organization? You keep that information flow coming through so that you're getting real data, and not just what your right hand man, who's also sitting there perhaps in Stellenbosch and isn't fully in tune with what's happening in the community, is actually passing on to you. And this ivory tower kind of issue seems to me to be a big issue in a lot of organizations, and one of the reasons why those big companies fail to understand, the opportunity that's out there. I know it's a kind of a sort of a long question, but let's just bring it back. How do you stay in touch with these communities and bring trust to them that they feel that you are accessible?
We are very deliberate in that every single one of our senior leaders, in actual fact, we try and make it throughout the organization, gets out and speaks to customers, goes on branch visits, goes to our business centers, goes to our call centers and listens in on the phone calls, be part of serving a client over and over again. So, just by coincidence, today our CFO Grant and the entire senior leadership finance team, they're in Rustenburg. They've been in Rustenburg. I think they went on Tuesday morning, and they're there till tomorrow. And they're going visiting all of our branches there, and they're doing so in a very structured way, in which you're not just visiting the branches, you're also going and speaking to small businesses around those branches, because we're a business bank as well, and walking the streets and communities and seeing how people operate. And we do that all the time. Basani, our executive for personal banking, is I think she's in Toyando today, doing the same thing. And I can give you another 100 examples. I personally myself go as well and do all of those things that we just talked about. I'm pretty sure that Vim, who you know well, has been at the call center recently, and he does so all the time. It is an absolute requirement for us to get out there. And when we're deliberate about it, I make it part of everybody's goal planning. It's something I demand as a CEO, not as Graham, but as a CEO, demand in our group executive sections that we do it and we come back and bring it. And we build that into our planning to have the time available. And I'm pretty sure that the wires are already full of all of the feedback that Grant is giving through to everybody in insurance and the credit teams and the technical delivery teams as to things that he's seen that need to be improved. Because that's then
I like
also what we focus on, is like be brutally honest with ourselves, what's not good enough yet. And when we do all of those things better next time and better the time after and better the time after, then of course, from a competitive perspective, we don't leave any chinks in our armor for our competitors to exploit.
You make it sound so easy. I wonder what these other executives are doing. Maybe that's something maybe a few psychologists or sociologists or anthropologists can explain to me why what seems so obvious to do you're doing and the others potentially aren't. Okay, we've got a shift. We've got 8 minutes left. There's so much we're not going to get through, as always. Bit of rapid fire. AI. Huge changes coming. Can you imagine a future where we have autonomous banks with maybe just as few as 10 or 20 people and pretty much just using agents to go and deal with millions of customers in South Africa?
I think such will exist. So yes, and so they will be some of our competitors of the future. I think that what clients will need is more and more tools that allow them to self-serve in a more intuitive and easy way. And we will be using similar tool sets to those completely autonomous banks within Capitec.
If you were going to build an autonomous bank, do you think you're nimble enough internally to do it within, or would you actually have to go and fire this out as a separate entity and hide your people away a million miles away from head office to give them the freedom to act like a startup and think like a startup? Do you think you're young enough where you could do this within, like a sort of banking version of Google?
I think we can do it within, and that's what we would try to do.
In the payment space, you mentioned it earlier, huge friction still in there, massively expensive. Nothing against anyone from MasterCard or Visa on the call. They've got to run a business, but it's expensive using their rails. Along comes BankServ and the SARB with an agenda to say, how do we go and make effectively payments, I don't want to say for free, but as cost effective and accessible as possible? How do we make it something which becomes available for the mass market across South Africa? Numbers of changes have been pushed through, perhaps haven't worked so well so far, but the agenda is still very much going in that direction. Talk about new schemes which are run from a South African perspective, and obviously some significant challenges, competitive threats, perhaps to the credit card guys at the moment. What's your view on where this is going, how this is good or bad for Capitec, and how you want to participate in this transformation?
Sure. So I think that the payment space is probably the one that's going to become most disrupted over the course of the next year or two ahead. So first, I think it's going to come quickly, and secondly, I think the disruption will be quite significant. And there are a whole number of factors feeding into that. Obviously, new technology, alternative payment rails, the environment within South Africa. So payments will become more accessible, they will become lower cost, and they will become embedded more and more and more into the thing that the client is trying to accomplish themselves. And what we're doing with it is we're trying to stay at the forefront of it. Rather than be swept along with it, we are trying to lead. We engage a great deal with our regulators, with the various different industry bodies, with PayInc, as well as internally developing solutions that we think will be available or appropriate, not just for us, but do so in such a way as make them available for others, and even blueprints for the likes of PayInc to lead us forward in the right direction. The one caveat, of course, is always going to be crime and preventing our clients being disenfranchised, having money stolen from them. And if you take something, for example, like Pix in Brazil, which everyone sees as a great success story, and by and large has been, but what's less well publicized is how much money was stolen in the first couple of years. And in the last 2 years, and particularly even in the last 6 months, Pix has implemented a large number of fraud controls, which do appear that they might start being effective, but they've done so reactively after billions of dollars has been lost. And in South Africa, we need to learn the lessons from that and rather put those controls in proactively so that our various different clients don't have to lose money first in order for us to put those in place. I think that's the one caveat. And I think the area that's most likely to be disrupted, of course, is international payments, cross-border payments of all kinds. I think the quality in terms of speed, knowledge of what your fees are going to be, the size of the fees, that's an area that's ripe for disruption.
Just a couple of minutes. Let's try to round out with a little bit about you, Graham. When you look back over your career, very distinguished career, what would you say have been the harder moments that you've had to go through?
Sure. So we tend to focus on what we're not doing well enough and what we can do better next time. So, there's probably something hard just about every single day. If you look at, time across Capitec, there have been sort of difficult times in the economic cycle with respect particularly to credit. 2008, when African Bank had its initial set of problems. The credit cycle after, coming back at the end of COVID, that was really hard for me personally. We were running the personal bank at the time, and we had some sort of mounting credit losses that, were my responsibility, and I needed to take ownership of fixing. So they were quite hard. Viceroy was a blip here and there, but that wasn't so much hard for us as a lesson for people like me and Grant when we sort of look back at that and see how Harry and Andre took that forward. It was a lesson on how you should manage a fake crisis like that. More and more, though, I realize that all of the difficult times are really not that difficult, because I have the absolute privilege of working with people I really like and admire. And I genuinely enjoy coming to work and being with, and trust that they do their jobs excellently. And you've mentioned that, a few of them yourself already. And when we arrive, there's real purpose here. And the purpose is one that resonates with me. And the principles that we use are aligned with my own personal values. So all of those difficult times aren't really that difficult, because where we're going is clear, how we behave is clear, and I really like the people that I'm doing it with.
I think with that, that's an extremely positive way to end the call. Graham, thank you very much for your time. I really, really do appreciate it. To everyone that has joined the call, thank you very much for joining as well. Please do give feedback. Good or bad, we can only get better if we go and get some sort of information from you guys about what you actually like. As always, we'll be sharing the video for everyone that's subscribed over the next couple of days when I get round to it, hopefully tomorrow, but don't worry if it's next week. And I'll also be announcing the next guest. It's an absolute cracker. I'm going to hold that one back just for now while I get the times and the dates just locked in there. Once more, thanks again to Silicon Overdrive and AWS for supporting the event. Very happy to put anyone interested in learning more about those guys in contact with them. Graham, thank you very much for your time.
Thank you very much, everyone.